For any entrepreneur, any business person that wants to do business in this part of the world, you have to really consider the fact that the infrastructure is not necessarily as suitable as the Western world. What we've come to realize and understand is that there's really a very small circle of Nigerians and Africans really that make up that pool of high net worth individuals who are investing in real estate. And it's one of the things that's holding the infrastructural development back in this part of the world. Because not enough funds are going into the development and infrastructure of real estate.
Sycamore, you guys have disbursed how much? I think it's 40 billion.
40 billion, yes. And all of that, the majority of that has been in recent years. For now, my African entrepreneur would be the Dangote.
Okay, welcome back to the Innovate Africa podcast, where we talk with African entrepreneurs shaping the future of business technology on the continent. And I'm joined here with Mayowa Adeosun. He's the co-founder and former COO of Sycamore, and he's currently the co-founder and CEO of Assetrix.
Yeah, founder and CEO.
Founder and CEO. My bad. Founder and CEO of Assetrix. So before we dive into Assetrix, let's talk about Sycamore.
Yes.
So for those of us, of you guys, I know what Sycamore does, but some people might not know, okay, what's Sycamore? So can you just give us a brief description of what Sycamore does? Then we can dive on to Assetrix.
Yeah, sure. So thank you for having me, first of all. It's a pleasure to be here.
Yeah, before we go on, how's your week going so far? Your week going so far?
It's a crazy week.
My guest.
Yeah, it's a crazy week. This week has been quite hectic, but it's been very productive, and we're trying to achieve a lot this week, and but so it's really I'm glad to be here because it's part of the objectives for the week to also interact and spread the message of what's going on, in terms of with Assetrix and even from Sycamore's perspective too. So it's good to be here.
Nice, man.
Yeah,
I'm glad to have you here.
Yeah.
So now let's just go on with.
Yeah, so Sycamore is as a fintech company. It's a credit-led fintech company, primarily focused on SME lending and giving loans to people in paid employment. But it's gone beyond that. It started from a peer-to-peer lending where we would match lenders and borrowers. But now it's kind of transitioned into a one-stop financial solution. So we have many different products on the platform. If you want a fixed deposit, you can get that. If you want commercial bills, you can get that. And if you also want to use our platform as an infrastructural play to lend money to your friends, families, and whatnot, we have an app, a feature in the app called Loan Friends, which is also very popular. So we're very proud of what we've done in Sycamore, and as of today, I think we've clocked over 40 billion in disbursements. Each month now we're doing over 2 billion in disbursements, loan disbursements, and most of that is going to SMEs. So we're really helping the economy to drive the growth of SMEs and stimulate the economy that way.
Because Sycamore is more business focused, right? Rather than consumer focused.
Yes. It's more business focused, and we're trying to be the first fintech company that will pretty much facilitate 100 million naira within a short time span. So if you want, as a business, if you want to come and collect 100 million naira, Sycamore is going to be that solution that you can do that, and we're able to achieve that through some sort of AI and some machine learning algorithms that we've put in place. So it's streamlining the process to allow consumers and businesses to get access to finance. So we're very proud of that.
Okay, nice. So before we dive into your entrepreneurship journey and whatnot, what was your previous background, if I may ask? I've already before you say let me become the CEO, I'm going to run this company, I know.
Yes. Thank you. So I have a background in business administration. That's my undergraduate degree, and I added an MBA on top of that from Lagos Business School.
Okay.
My undergrad, by the way, was from Morehouse College in Atlanta, Georgia, and but from a professional standpoint, I actually started off in an insurance company, right, as a credit and financial risk underwriter. So that's where my wings were spread, and I got to really understand a lot about the pain points businesses have. So because we were essentially underwriting a lot of businesses and seeing if they were capable of taking some insurance products that speak to business needs. So that's how I got started in insurance. Then transitioned to consultancy for a short period where I worked on the Tony Elumelu Foundation for the he had this program. I think it's still ongoing, where he gives out some sort of facilities to young entrepreneurs. So I was part of the consultants that was going through the vetting process and vetting the entrepreneurs, their business plans and models, and seeing which ones could scale. And so I did that temporarily, and then I met my co-founders in Lagos Business School, and then we started from there. This is Sycamore now. So we've been growing that. We started in 2019, and our first customer was one of our classmates as well. So pretty much the MBA gave us all the resources that we need to scale, and we've done incredibly well since then, and I'm very proud of that.
Okay, so you started from 2019 to you recently left the company.
No, so I wouldn't say left, because once a citizen, you're always a citizen, and citizen is the name of the ecosystem that we've built in Sycamore. So what I would say is I've kind of transitioned operationally from day to day to focus on building Assetrix, which is a new platform that was launched on the 1st of October, which happens to be Nigerian Independence Day. So it's a natural transition. I'm using the experience and the learnings from Sycamore and building those financial pipelines and infrastructure to focus my attention now on real estate and seeing how we can develop real estate investments in Nigeria and in Africa at large.
Okay, nice. So speaking of experiences and learnings that you had from Sycamore and you're taking it over to Assetrix, can you just tell us some experiences that you had building Sycamore? Basically, some problems you encounter when it comes to lending. Lending is a very, I wouldn't want to say sensitive, but the culture behind lending, especially in the African market, Nigerian market, is very negative. You go to the Western markets like US, the whole system is built on credit. Yes. People use credit for, I don't want to say stupid, but the basic of purchases. So when it comes to Africa, when it comes to Nigeria, you hardly see things like that. So the problems that you've encountered at Sycamore, business lending and just basically things like that, experiences, the problems.
I mean, I would just say that for any entrepreneur, any business person that wants to do business in this part of the world, you have to really consider the fact that the infrastructure is not necessarily as suitable as the Western world, right? So in the West, you could have some sort of fintech that is built upon the infrastructure, and that would allow you to really just maybe have like a consumer-facing app that just maybe builds upon what's already existing. But in this part of the world, you have to really be prepared to build the infrastructure yourself as well, right? So for Sycamore, one of the challenges that we had was obviously you have customers who have the intentions of paying, who have the capacity to pay, but the challenge is that you have to be able to find and identify those people out of the many who will apply, right? So you have to streamline your processes to be able to pick out good customers from the bad ones, right? Because there are obviously going to be many people who apply, and not all of them are going to have the purest intentions.
Exactly.
So for Sycamore, what we had to do is we first started off using some sort of like manual process, right? Just to understand the needs and the pain points for our customer. But then what we did is that we started adding the technology. So your technology has to support the real business case, right? So you need to understand the business first, and then you add technology to support and scale after. So that was what we did. We first started, because the three of us are non-technical founders, we had to start with a white label solution, and that was what we used for the first 2 years of the business. But as we started to grow, we needed to bring the technology in-house, right? So we started to now develop the technology, the capacity, and today we've built a really, really fantastic ecosystem within Sycamore, where we have our own what they call like banking solution. Is kind of
you built all the infrastructure in-house at Sycamore.
Nice. Sycamore has a full solution of technology, and that's led by Daniel, who's our CTO, and we're incredibly proud of what we've been able to build. So we also had to add like some sort of like bank statement analysis, because we realized that obviously as we grew, we couldn't be looking through bank statements individually. That would take forever. And obviously the human error factor is also something to consider. So you have to bring in the technology so that way you can, kind of minimize the human error. Because if you're looking through a bank statement and you're doing it day in, day out, it becomes very monotonous and you become very tired and
Exactly.
you start...
That's very stressful.
Very stressful. So the technology was now built based on the needs, and we now have the bank statement analysis. We have like a psychometric analysis as well, where we ask our customer certain questions, knowing that we have the answers, and we see what the responses are, and if it matches up to the answers that we believe should be, and then we can kind of decide on, okay, is this person a truthful person? We don't mind if there are issues on the application, but just be transparent with us, so we can know that we're dealing with a transparent person, because there's always going to be issues down the road, but it's easier to deal with a customer who is transparent, who is willing to do the work necessarily, right? As opposed to someone who is just trying to position themselves in the best possible light to collect the loan, and then once they've collected it, you don't see them again. You don't see them again. So you have to be able to build the infrastructure around the need of the business, and we've been at it for over 6 years now. We're now in our seventh year, and we have a very big plan coming up for the next couple of years, which is obviously going to be led by my co-founder, CEO Babatunde Akimoses, and Onyinye Okunji, the CCO. So it's fantastic. I'm very proud, and I'm always going to be in the ecosystem to support wherever I can, within my capacity.
Okay, nice. So when it comes to lending, like I mentioned previously, lending is very risky. A lot of founders tend to avoid, when you say fintech, they typically just focus on FX, multi-currency accounts, payments.
Yes.
So lending is very risky, especially because of the consumer behavior. Even if you say you're more focused on the business loans, it's still the same thing in Africa.
Yes, lending is lending.
So when someone first of all, let's talk about the payment collection process. The payment collection process flow, you pay back, but when someone doesn't pay back, how do you tend to navigate that? Someone was supposed to pay this month, they haven't paid this month, they haven't paid for the next month. So how do you guys navigate those types of issues? And the quantity of people that don't pay back, is it much in this business lending space in Nigeria? Yeah,
well, I think for the repayment aspects of the lending business, which is the most critical aspects, right? It's easy to give money out, but it's harder to collect it back. I think if you come into this industry or this market believing that technology can solve all the problems, you might run into the challenge that I mentioned earlier. That the industry or the country isn't necessarily set up the same way as Western countries, where you can rely on the infrastructure to protect you, right? So for Sycamore now, we have a mix of technology and manpower. Right, and I think we kind of learned from some of the people who have done it before us, and who have even doing it much larger than us in a larger scale. Like if you've heard of Lapo, right? Lapo is very much boots on the ground, and if you really know how much they're doing in numbers, you'll be very, very shocked. There's very, very few fintech companies that can compete or even say they have the same sort of reach and impact as Lapo, right? So Sycamore, we're not Lapo, but we've kind of taken and learned from their way, which basically means that we have to have some sort of manpower for repayments, and we've built that capacity to a large extent, and then we've now supported that with the technology necessary for us to make their life a lot easier. So what we do is we have a database of our customers that we reach out to periodically ahead of the repayment dates. So you need to start preparing the customer's mind for the repayment. So you reach out, and maybe that could be via email or SMS. And let's even say that the repayment dates is missed. We typically, most of the times, we take collateral, right? So we collateralize a lot of our loans, and we do that by taking movable collateral. So you have your vehicles,
real estate,
exactly. So even real estate has been very tricky, right? And I think this is probably one of the reasons why I decided to move on to do Assetrix, because I realized the real estate angle was non-existent really for a lot of fintechs, for a particular reason which we'll get to, I'm sure, later in the conversation. But so what we were limited to was vehicles. So not many people have the vehicles of large value that can accommodate the loans that they wanted, but we had to manage with the vehicles, and we've seen a lot of success in that, because once you have the vehicle, and you don't necessarily need to take physical possession of the vehicle, you just need to put documents in place and put like a tracker, which is technology in itself, and that just helps you to keep the customer responsible enough to ensure that, okay, look, we have a power of attorney, we have some legal documents to say that if the loan is going to go bad, that we will take possession. And many times we don't necessarily have to. It doesn't really get to that point. Most of the customers already understand, and based on transparency, they reach out to us and say, oh, this is what's going on, and then we can reschedule the loan, we can make some adjustments, but just carry us along, and we'll be willing to work with you.
Basically, just be transparent.
Just be transparent. That's it.
Yeah.
I mean, we're not one of those, and I think in this industry, you have some very bad actors that they want to start up lending companies, and because the customer's not paying them back, they're now doing things that are illegal. It's very bad. It's very wrong. And at Sycamore, we don't support that. We don't endorse it. And I think if you want to get into the lending business, you have to really be ready to do the legwork and do the groundwork, and take some bruises along the way. But with that being said, our NPL, which is the non-performing loan, has remained single digits, right? Some fintech lending companies are in the high double digits. You'll be surprised. And the way that they can achieve that is because they charge a higher interest rate. Yeah. So they kind of price in the loss in their interest rate, which is a smart thing to do, but it just means if you really want a large amount of money, if you really want to grow your business and scale, there are only going to be a very few fintech companies you can actually get that kind of finance from, which will be over reasonable interest rates. And I say reasonable in quotations, because it's never going to be the commercial rates, right? You're not going to be able to get the same, even what the banks offer. You're not going to get that from a fintech company, unless they have,
Wait, are you saying the banks' rates are better than fintech rates?
100%, because the cost of capital is something to consider, right? The banks, they use they use depositors' money to fund their lending. Fintech companies, we use investors' money or people who want to do fixed deposits, and so they are more savvy investors, and that's why it's kind of a balancing act, right? You have to balance your lender's interest. They want the highest return, right? So someone comes to you and says, look, I have 50 million naira, or I have 10 million naira, or even 5 million naira. How much can you give me for this? And then you have to, take that, negotiate, give them a rate, a fixed rate, and then that is transferred or baked into the cost of capital, which is, paid for by the borrower. So that's part of why interest rates for fintech lending, companies can't be as low as commercial, because the cost of capital is much different, and that's just the way of the game.
So so essentially you're competing with banks, right?
Not really, because banks don't even lend that much to SMEs and to people in paid employment. If you look at their books, it's less than, it's single digits. It's probably less than 5% of their balance sheets.
Why do you think that is, though?
Because they don't really want to deal with the headache of lending. They have many other ways of making money that doesn't put their capital at risk, and they don't want to have to start dealing with collaterals, dealing with vehicles. So they've left that for the fintech companies. Say, oh, you guys just take that aspect. We'll take the cleaner, easier money. But to play in the spaces the banks play in, you need a lot of money, right? You need a capital base, in the billions, So they really don't have any appetite for lending, which is part of the problem, because every single fintech company that exists today is really just an extension of what the commercial banks should be, the services the commercial banks should be offering. Exactly. Right? If you go to a developed country, you'll find out that commercial banks in those countries offer a lot of these products that these fintechs in Nigeria and Africa are offering. Yeah. It's only because the commercial banks really don't feel it's necessary for them to explore some of these, problems. that's given rise to fintechs and to technology companies. So in one way, we're kind of grateful for the commercial banks. They're allowing us to grow and to create some sort of positive impact. But on the other side of the equation, it's something that's ordinarily might be done in other climates.
Okay, so to reduce the risk level, you guys normally use collateral, right? So
Correct.
speaking of the collateral, you said vehicle collaterals.
Yes.
So the value of the vehicles, does it have to match the amount the person is borrowing, or?
It has to be higher, actually, because you have to also account for the interest rate component. So you want to get your principal back, but you also want to make a return on the principal, right? So if you've agreed, let's say a loan is 10 million naira and the interest on top of that is 1 million or 2 million naira, right? You want a vehicle that can cover the 10 million and the interest. So you're going to probably get a vehicle of 1.3 or 1.5 times the value of the loan, right? So that's like 150% value of the loan. So that's enough to cover the principal, get your principal back, but then also, make some of your interest, and then whatever is left can be returned to the borrower.
Okay. And you said Sycamore, you guys have disbursed how much? I think you said 40 billion.
40 billion, yes. And all of that, the majority of that has been in recent years, right? We started off very, very slowly in the grand scheme of things. Like I think
from 2019 to 2025, 40 billion, that was a very impressive metric.
Yes, yeah.
That was very impressive.
And I thank you. The majority of that has been in the last 2 years. So that just really shows how, companies, especially when you start small, you start lean, don't shortchange, don't short sell yourself, because if you just keep at it the way that Sycamore did, within the span of 5 years, you can see, after year 3, year 4, there should be that hockey stick growth, where where you look back and you realize, wow, you've come a long way. So that's the story of Sycamore too.
Nice. And you said you guys are 3, right?
Yes.
For Sycamore, but all non-technical founders.
All non-technical founders.
So how did you guys actually make this work? Because me myself, I'm a technical person. My founder is technical. It's just very difficult to work. If I'm being honest, no offense to you, but it's just difficult to work with non-technical founders.
I understand.
So how the 3 of you non-technical?
I understand 100%. And the funny thing is that I have a business administrative and finance background. Like my discipline is finance. But to be quite honest with you, over the last few years, because of the fact you have to be able to know your gaps, know your weaknesses, and you can decide, okay, do you want to double down on your strengths, which ordinarily would be the best thing to do, or do you want to become more well-rounded and cover up some gaps and learn things that you ordinarily wouldn't know? And that's the thing that I spent, and even my co-founders too, we've learned a lot, right? So we're non-technical, but with that being said, there's some certain things you have to learn, even if you're non-technical. You have to be able to speak, communicate with the technical team, and it just makes life a lot easier if you understand at least a little bit of what they're talking about. So you don't necessarily have to be be able to write code, but you do need to be able to understand, what is the bottlenecks, what the team needs, some of the solutions that they're using when they're talking about their tech stack, what applications do what, and why did they choose that application as opposed to another one? So these are certain questions you need to kind of familiarize yourself with as a non-technical founder. So there really isn't any excuse, even if you're non-technical. And I think the reverse is true too, right? So if you're a technical founder, you also need to understand the non-technical aspects, right? The business aspects. And I think, so it's just like, that's the way of the world, the way of life is.
You need to understand technical concepts and vice versa for non-technical founders.
Exactly.
So that's
Exactly. So
okay.
that's it.
I said real estate for collateral, and you said, okay, that's where we're going to go off to, Assetrix. Now let's talk about Assetrix.
Yep.
Can you just give us a brief description of what you guys do at Assetrix, how you plan to dominate this market essentially, and things like that?
Okay, thank you. So Assetrix essentially is an infrastructural platform that allows investors, that's real estate investors, developers, and regulators to leverage on in order to improve the real estate environment in Nigeria and in Africa at large. How we do that is by enabling developers to come to the platform to raise equity capital so they can complete their projects. Right now, developers are very limited in their options on how to get access to finance in order to complete their projects. We know we've mentioned how commercial banks are not really into lending.
Yeah.
And we've also mentioned the limitations that fintechs have in lending because of their cost of capital, right? So what real estate developers are left with is selling off plan, right? So they sell off plan, and typically they sell off plan to high net worth individuals. And funny enough, you would think that that's like an endless pool of funds, but what we've come to realize and understand is that there's really a very small circle of Nigerians and Africans really that make up that pool of high net worth individuals who are investing in real estate. And it's one of the things that's holding the infrastructural development back in this part of the world, because not enough funds are going into the development and infrastructure of real estate. So what we've done is that we found an alternative to the dilemma, which is real estate developers only being able to raise funds through high net worth individuals.
Yeah.
What we've done is we've democratized the real estate investment opportunity by allowing retail investors, both locally and in the diaspora, to participate. And we've done that because we realize there's a growing demand for real estate investment in this part of the world. Those who have JAPADs still, have always, since time immemorial, have always wanted to invest back home. But the reason why they've had challenges investing, some of them have, but they've had challenges investing because of the lack of trust and transparency, right? The lack of trust and transparency is what makes it very difficult to invest in real estate in Nigeria. So what we've done is that we've used the technology available now. We have blockchain, we have the Web3, and we would say we're kind of like Web 2.5, because we're not completely, on chain. We do have some internal parameters to ensure the security of our investors. But at the same time, it's not just a Web 2.0 platform that is all the information and data is stored in-house. You actually can have access to some of the materials and informations that we've acquired. And what do I mean by that? So developer comes to the platform, Assetrix. They request for 30% of their project. Imagine the project is 100 million naira, for example, and they need 30% or 30 million naira to get the project to completion.
Yeah.
We take that 30%, that 30 million naira, and we put it on the platform, the Assetrix platform, where individuals like you and I can participate by buying tokens in that project. And the token sizes can vary, but for now, it's going to be around like 4 million naira per token. So that 30 million naira is broken down. Let's just say for ease, like to 1 million naira. So we have 30 people that can participate in that investment project. So once you've bought tokens and the project has been financed, what we do is that we release that 30 million in milestones. So, and it's released in milestones based on the developers' milestones that we've agreed. So let's say there's 5 phases to the construction project.
Yeah.
Based on reaching each milestone, we'll release funding. But we'll not even give, based on my experience again in Sycamore in terms of like capital allocation, one of the main risks would be, what if you give the developer cash and they decide to misappropriate the funds and do something else with it. Yeah. So we already thought about that, and that's one of the the experiences that I'm taking with me. So what we've done is we've created partnerships with some other prop tech companies who their business model is to provide materials to developers. So instead of giving the developer cash, we can provide the developer with the materials necessary for them to execute their project. So you
give the cash to the companies providing the materials.
Exactly, okay, right? So it's like a 3-way ecosystem. And obviously there's the cost of material and there's the cost of labor. So the cost of labor, the developer will have to make some sort of contribution towards the cost of labor, which we will now reimburse at the end of the milestone, right? So that money, the initial investment that they made, let's say So the initial example was 30 million. Let's say out of that, maybe is 5 million is towards cost of labor. So they would have to give some sort of, contribution for that 5 million. So, but that 5 million will be reimbursed to them after each milestone, right? So once the milestone has been complete, we'll give them back the 5 million so they can use that for cost of labor for the next milestone. Now, all of this happens on chain, right? So as each milestone is being reached, we are delivering updates to our investors via the blockchain. So that means the information is transparent. Even before you invest, you get to see certain documents to ensure that, to show that we've done our due diligence, right? So you're going to see some sort of, governance consent or CFO or deed of assignment, or you're going to see some search reports, you're going to see some valuations, you're going to see documents to show that we've done the legwork, we've paid for the services, and you just now, as an investor, just get to benefit from all the legwork Assetrix has done. So based on each milestone, we're releasing materials to the developer, and once complete, the project now is finished, right? So you now have 100 million naira project, right, based on the original valuation. So what happens is, how do investors make money? I guess is the next question.
The returns for people investing and buying the tokens and all.
Okay, good. Yeah. So I think just to give an idea, so let's say the project value isn't 100 million. Let's say it's actually the market value is 120 million, but it will be discounted to 100 million at the beginning of the project, right? So that discount is what would be the investor's gain. So if the market value of the project is 120 million at completion, we would say, okay, based on the time value of money, we're going to discount it to today's value, which would be 100 million. So any investor that participates will get the appreciation from 100 million to 120 million within the time period. And it could be more than that, but I'm just using that as an example. Yeah. So if you invested 1 million in this project, you would end up getting, I don't know, 1.3 or 1.2, however the proportion. I didn't do the math, but that's appreciation that you would benefit from too. And at the end of the project, what ends up happening is that we also have partnerships with other business partners that are willing to off-take the project at completion. So right now we're doing a buy and sell model. So we buy, build, and sell. So we partner with developers, and we have some big names too, like Periwinkle is one of them, Haven Homes is another, and we also have Horizon Estates. So these are some. If you're in the industry, and you would know some of these names, and these companies have built their brand over many years, and we're very privileged to be able to partner and work with them, and to put some of their projects on our platform. So at the end of the investment period, once we sell the projects through one of our partners or even independently, based on your tokens that you've purchased, your participation, you will receive your proportion in the proceeds. But what we hope to achieve in the future is a buy, build, and operate. So we buy into the development of the developer's construction projects. Yeah. We facilitate the project's management and the capital allocation throughout the construction project. And then once it's complete, we now operate it through some sort of third-party partnership where, you have many businesses that are operators that can operate real estate properties. For example, you have like hospitality brands that, if given the real estate, they can operate it and use like a short lets model, and then on a monthly basis can pay some sort of like revenue share or some sort of return, which can then be shared with the investors on the Assetrix platform. So as an Assetrix investor, you can participate in that cash flow generation. And then another angle, let's use another example. You might have um, let's say a laundry business, right? A dry cleaning business. You can also use the Assetrix model by once we buy, build, you can operate a real estate project that is designed and suitable for the laundry,
For the laundry business.
for the laundry business.
Yeah.
So we're trying to provide businesses as well. The long strategy is to provide businesses with the real estate to thrive. Because right now, if you're a small business owner, you understand that one of the main challenges is having to figure out how you're going to pay your lease. And leases typically are paid 1 year, 2 year, even 3 years in advance. And the longer you pay, the less likely of the volatility of the price going up and down. Or it's never going down, it's always going to go up. So the longer you pay, you're locking in that price for a longer period. But what that means is that you need to have the capital available to pay a 2 year, 3 year lease. And in many cases, that can run into the tens, if not hundreds of millions, which small businesses just don't have, right? That money should be going into working capital, should be going into to expansion, into strategy and things, or even technology. So what Assetrix now does is, from the business perspective, it allows for monthly or quarterly rents or lease payment, because you're now dealing with the landlords whose business model is to take cash flow periodically, as opposed to large lump sums at the end of the year, or 2 years or 3 years.
Yeah.
And for the developer, you're dealing with a financier whose interest is to make an equity investment as opposed to a debt investment, right? So it doesn't come with the interest rate. So really, you have an alternative to your off-plan sales. So, and it's also a bigger pool of investors, because obviously you're comparing a very small pool of HNIs to a wide, local and diaspora who'll be willing to invest, 4 million naira, 5 million naira here or there. So, and then lastly, last but not least, you have the investors, right? So gone are the days. I mean, I don't know if you're following, but the real estate industry is becoming increasingly more expensive, right?
Yeah.
And if you fast forward into the next 5, 10, 20 years, or even for the next generation, when our children get to our age, how hard do you think it would be to get onto the real estate market? Or
Exactly.
it would be incredibly difficult. So as individuals now, we need to figure out a way of how to participate, right? How not to let this opportunity pass us by. And the only way we can do that is by fractional real estate investment. Gone are the days that you can work 10, 15 years and save up from your salary to be able to buy, a plot of land and build your home. And you can technically do it.
Now.
But it's, where you'll build it, you won't even like it. And so, if you want to have a more practical approach, what Assetrix is essentially doing is allowing you to participate in that capital appreciation. And eventually, what we'll also be able to do is that once you have accumulated enough tokens, you can even aggregate them, and we can even say, okay, this is a property that we have on the platform. You can exchange your tokens for real estate property. So it keeps you keyed into the real estate long term, and it provides a lot of opportunities and benefits for you down the road. But this is very much it's futuristic, it's revolutionary, but the opportunity is endless. Exactly. Right, so I could sit here all day and tell you about the things we have plans, but let's start off with our first property investment is coming up this week. It's in conjunction with the Periwinkle real estate developer, and I think it's called Mason's Enchante. It's a very interesting name, but it's a very beautiful project located on Orange Island. And it's a 2-bedroom, so we're starting off with a 2-bedroom unit going for 260 million, and each token is sold for like 4 million, so you can participate. And we believe in the next 8 to 10 months, that property could be valued well over 320 million naira, so you get to benefit from that capital appreciation. So that's ordinarily, unheard of in this part of the world.
Nice. Actually, like what you guys are trying to do, you're trying to democratize real estate investment for the average person.
That's
nice.
basically
That's nice.
Mm-hmm.
So let's just round up with a few fire up questions. So I'm guessing you've been to more than one African country before, right?
Yes, I
So
have.
what's your favorite African country? Let's have with that.
Ooh, my favorite. My favorite would have to be, for now, Kenya.
I was expecting you to say Nigeria. But
Nigeria is always going to be, close to my heart. But if I'm speaking outside of Nigeria, then it will be Kenya. But Nigeria, I love Nigeria now. There's nowhere like Nigeria. No. But Kenya is a very beautiful place. South Africa is a very beautiful place. Cape Town is a beautiful place. And I've been to Morocco. Morocco was nice, but it would have to be Nigeria and Kenya. Yeah.
Okay. Who's your favorite entrepreneur?
My favorite
Mark
entrepreneur
Zuckerberg,
is interesting.
Dangote.
No, I mean, look, I love Dangote, and it ties into the learnings that we had from Sycamore and even now from Assetrix. Dangote, what he's done, along his careers is actually incredible, and I can't wait to read, his memoirs and his life. Right, I'm sure there's books on him already, but what he's done and what he's doing at the refinery, is amazing.
It's actually crazy.
It's crazy. Yeah. I think you really need to wrap your mind around.
Self-sufficient,
and it's really how I look at business now. You have to be prepared to build the infrastructure yourself, right? If the infrastructure is not supporting you as a business person, you have to be prepared to build it from the ground up, and that's what he's done.
Yeah.
Right. Yes, he's obviously doing it at a much higher level. He has bigger resources, but even at that level, I'm sure it was financially, tight for him.
Course, yeah.
This is billions of dollars we're talking. It's not, a cheap project that he can just do, easily. So he had to find investors, and he had to work with a lot of stakeholders, and so
Dangote, right?
This is Dangote, yes.
Yeah, no, your favorite Dangote, based on the way.
For now, in my African entrepreneur would be Dangote, but I think who else? I've forgotten his name. I know his name. It's not coming to mind. But I would say Dangote. Let's go with Dangote.
Yeah. Thanks so much for taking the time to have this conversation with me. Unfortunately, we couldn't actually have more because I also have a few more questions. But yeah, thanks so much for taking time of your day to come here, just have this discussion. It's always nice to have African entrepreneurs, Nigerian entrepreneurs here. So thanks, man.
Thank you for having me.
Yeah.